Hi folks, welcome to today's analysis. Today's July 24th and it's Tuesday. It's about 3:20 Eastern Standard Time, so our daily bars are getting close to closing, and I'm going to go ahead and cover our daily analysis, kind of tell you the things that I'm looking for on a few major pairs. The pairs I'm going to cover today are the Euro Dollar, the Euro Yen, the USDCAD, and the USD Yen. So some yen, some euro, and some dollar in there. And Canadian. So those are the four pairs that I'm going to cover, and hopefully I'm going to give you a good outlook for what to expect or what you might want to be looking for in the future, so that you can trade those pairs effectively. And obviously that's the goal of what we're doing here, is just to kind of help you be profitable and effective in your trading. Alright, so the first thing we always like to do is look at the news, and I'm going to pop that over here. Now, there's not a lot of news tomorrow, especially during the New York session, which is what I trade. I don't know if, how many of you are trading the New York session, but that's what I'm typically trading. But we do have some news tonight during the London session, which is euro and pound news. So obviously, euro pound might be affected during the London session tonight, and you might want to look for something to happen there. The euro is the German IFO, so that could be pretty big news there. Obviously, Germany is basically the euro's main strong economy. So if we were to get bad German news, while Germany is kind of holding the rest of the Eurozone together, that could really spell a collapse for the euro. So that's something definitely to be looking for. And then there's GDP for the pound. So also another big announcement that you'll definitely want to be paying attention to. Okay, let's take a quick look at our terms here. I try to be very clear that this is for educational purposes only. Winners Edge Trading is not licensed or qualified to provide investment advice. It's very important that we follow the United States guidelines because they're very strict about these rules. Okay. Now the euro dollar obviously is on a severe downtrend, and we've talked about this a lot. You can't really draw an exact trend line, but what you can see is that the euro dollar has very consistently been stepping down, and you could draw your steps in whatever way you like, but you see that in each one of these legs there's definitely significant steps that are happening. Now it is important to note that there are legs, because every once in a while, like here, you'll get a pullback that's longer than just one of these steps. Okay, so instead of just coming to here and then continuing down, you actually have an elongated step that comes up before our next downtrend continues, like in the situation here. So here we have a little bit longer step, or I should say a longer retracement than in some of these other cases, but the fact is that obviously the overall momentum is downward, okay? And that's something that, it's critical to understand, even though that's obviously very basic. It's important to pay attention to your long-term situation, and obviously with the euro over the past several years, the long term has been bearish. And Tony mentioned in his fundamental report that right here where we're at now, we've hit 2-year lows, and we're actually approaching that low that was set in June of 2010, which would break that 2-year low. So or over 2-year low, I should say. So that's important to note, because when you get to those resistance points that haven't been tested in multiple years, some very interesting things can happen. All right. So obviously, I'm trying to be clear that the euro's in a downtrend, but more than just it being in a downtrend, we have to understand that there's a lot of euro sentiment that's providing some serious momentum to the downside. Okay, so when you see runs like this one, this is a good run here. Okay, when you see a run like this, that's not just technical trending markets. That's a collapse of the euro against the dollar. Okay, so many times when you have just a collapse like this that's that steep and that consistent, you better be ready to short after your next leg up. So we had this little channel upward, and the collapse here isn't quite as bad, at least yet, but still obviously a very strong collapse in the downward direction. Okay, so there's a lot of euro bear sentiment that's following through here, and as far as I'm concerned, you definitely want to be on the short side of the euro at this point. Now, that's not to say that there's not going to be good intraday long setups, and as a matter of fact, I've taken a long setup in the past few weeks. But if you're looking for long-term, large amount of pip trades, I think it makes sense just to be on that bearish side of the euro, because the sentiment is certainly strong that the euro is collapsing and that there's a lot of negativity in the eurozone, even though obviously the United States economy is not great either. But still, you know, you got to look for the overall sentiment here, and for me, that's euro bearish all the way. And if we switch over to our euro yen chart here, which, let me find that. Where am I at? Euro yen chart. You'll see that it's even more severe because the euro yen hasn't hit these lows since all the way back here in 2000. So we're talking about 12-year lows, and you don't get 12-year lows without serious sentiment in one direction. Okay, you can't just collapse to a price that currency pair has not seen in over 12 years without, you know, some serious crumbling of the currency. And that's what's happening here with euro. And you know, if you notice, you look back and you can see that there's been times where euro has made some charges. Like, you see this is a serious leg. I mean, there's a lot of pips there that you can make in the bullish direction. But obviously, none of these runs here and here and even here compare to the overall collapse to the downside. Okay, and that's what's important to note. Obviously, you can make some serious money in either direction. That's the idea of a market. If you couldn't make money in both directions and you couldn't lose money in both directions, then we wouldn't have a market. But the bearish collapses, at least in terms of the euro right now, just have so much more potential for profit because of the amount of longevity that they have in them. And so, for instance, if you would, you know, hold a euro yen short for a long time and obviously bear the you know, the large pullbacks in the bullish direction, then you could hit multiple thousand pip trades. And so I'm not suggesting that, you know, we always try to hit multiple thousand pip trades, but when that's the case, when that's the kind of momentum that's going in your direction, it just makes sense to go ahead and follow that. So with that said, when we get breaks on the euro yen, like this little up channel was kind of a joke, but it started moving up, you know, somewhat consistently for a few weeks. When this level broke, that's a phenomenal short opportunity. Now, I don't watch the euro yen a whole lot, so I didn't take advantage of that trade opportunity, but I should have, because of the overwhelming momentum to the downside already. And when you have momentum, when a currency looks like this, okay, and it's headed that straight down, and you get a little bit of popping in the upward direction, you better be ready to short when it breaks back down, because all of this momentum that we've established here is going to follow through on the next break most of the time, which is going to provide you with really great opportunities to short that pair. Okay, so you want to take advantage. When you have an overwhelming market like this, you need to take advantage of that. And that's all I'm trying to explain. By going through the euro dollar and the euro yen and just pointing out the boring long trends, what I'm trying to point out is that when you get intraday or smaller time frame breaks in that direction, you need to remember that all the momentum from the past several years is going to be pushing through and maintaining through these breaks. So a break like this one here is not just a normal channel break, it's a continuation of massive downtrend that we see here. Okay, so I'm trying to drive that home. I know this is probably some pretty boring analysis, but that's what I'm trying to drive home, is that you have to take advantage of those bearish collapses when they're already in line with the longer term trend. And in this case, hitting 12-year lows is obviously showing that very bearish sentiment. Okay, let's switch to the pound dollar. Now, the pound is a little bit different. I wasn't actually planning on covering that today, but I do want to show that it's a little bit different because we have a more sideways market over the recent time. And so in this kind of market, you can go both short and long and expect to make a decent amount of money. Now, you can see here that I just had a short entry. I went short here at the end of Friday, and I hit a 93 pip trade pretty quickly. And now I'm attempting to go long in that direction. And you can see that I'm down about 26 pips on my long entry. And my stop loss is right here, so I'm not far away from getting stopped out. But what I was trying to do was take advantage of this sideways market that we have here and try to hit it on its way back up so that I could take both profit on the short side and the long side. Because sideways markets, you know, give you the ability to do that, obviously, and that's what I was attempting to do. Now, obviously, this bullish entry is not looking too good for me right now, but we are at some serious support, so I haven't given hope on it yet. But I want to show you just kind of the difference between what you can do in a sideways market and an overwhelming trending market, like is the difference between pound and euro right now. Okay, so hopefully I'll get out and I'll be able to make a trade on the short side and then the right back into the long side, and that would be a pretty great trade for me. Okay, the USDCAD is something I want to look at because the USDCAD is approaching our trend line, which I've been paying a lot of attention to. So we have the USDCAD now. The USDCAD it depends on how far you go back, but it's pretty sideways as well, I'd say. You can see that if we go back, there's a lot of crossing in this area. So I'd say that's a pretty sideways market overall. Now recently we've had obviously some upward momentum with this US dollar rally against the CAD. And so this downward trend is kind of looking like it could be a very large bullish flag. Now, obviously, that's a more extended bullish flag than you might normally see, but that kind of pattern is not unusual. So, in order for us to be confident in a long entry here, we'd probably need a break of this trend line eventually, a retest, and then a continuation. And for me, that would provide us with a great opportunity to go long. Now, I'm saying that, but it's important to remember that in the meantime, any kind of bearish bounces off the top of this trend line are probably pretty good bearish entries. Now, unfortunately, the channel is a little bit tight, so you can't get a lot of carry through or follow through on our bullish entries if we have a bullish bar that heads down. But still, this range is about 200 pips wide in most cases. So still definitely some pips there to be found. But I just want to share with you that this is a trade that, or a pair that is very interesting because you can be looking for both bullish and bearish entries at the same time, and that's always something that I'm looking for. I like pairs that will give you both options at the same time, and that's what we have here. Okay, let's see, did I want to look at one more thing? Maybe the Euro Pound. I don't think I actually planned on this either, but the Euro Pound is something that we had a collapse through the descending triangle here, and the reason I want to show you this is because I'm also in this trade, and it's at break even right now. I just kind of entered shortly ago, but it looks like this bullish bar that we see here was going to be a fake out, and we're actually getting right back into a continuation of our downtrend. So if that's the case, I wanted to get in on this as early as possible so that if it does ride all the way down here, that I could get as many pips as possible out of the trade. So that's something that I want to call your attention to as well. I don't know, obviously, for sure if this is enough momentum to continue this downtrend. And there's obviously going to be some news and other things that play into that. But for me, I'm trying to get in on this as quickly as possible if it is going to continue, because there will obviously be a lot of pips there if this is a longer-term momentum carry trade. And this again goes back to the fact that when you have a lot of momentum already headed in your down direction like this, continuations of that carry through on that and can also provide a lot of pips. Alright, so those are kind of the things that I'm looking at today. That's obviously a very basic overview, and I was more stuck on showing you those trend situations today than I was on the intraday analysis. But that's just a point that I think is really important. I wanted to drive home, so hopefully that was helpful to you. I apologize if I wasted your time. My intention was obviously to give you some good examples of trends following through and how you can take advantage of that. So I hope that's what you got from this, and I would love to get your feedback and your thoughts, so feel free to leave those in a comment or a question or anything below, and I will talk to you shortly. Have a great day.